Hello, good afternoon. You're watching Market Fatafat on ET now. I'm Vinny Motiwal, along with me, Cheryl D'Souza as well. Cheryl, seems like we're seeing a slight bit of a fall that has come in the markets now. Actually.
Absolutely, Vinny. In fact, the fall actually has been there for a while. The markets are holding on to those levels right now. As you can see it on your screen, 50 points higher coming in for the Nifty. Let's take a look at what Nifty Bank is doing because that was underperforming the benchmark indices a tad bit. So let's take a look at Nifty Bank. And Nifty Bank right now is seeing gains of about 69 odd points or so. Talking about the advanced decline ratio and how that is actually, it is for now skewed in the favor of gainers. So that's one thing that has maintained over the entire course of day. Talking about the list of gainers, then you have a handful of gainers, and let's not forget or lose sight of what's happening with the Aditya Birla Group counters, because all of them have seen very good up move, be it Grasim, be it Hindalco, be it Vodafone Idea for the matter of fact, AB Capital also, AB Money, all of them are seeing very good gains in trade today. So don't lose sight of the AB Group counters. Right now you have Grasim, that's the top gainer in the Nifty. You have Airtel, HCL Tech, Nestle, HUL amongst the other set of gainers. While on the losing end of the market is Sun Pharma, that's the top loser on the Nifty, down about 2%. We have BPCL, Reliance Industries, Hindalco, HDFC Life that are taking it a bit easy. So that's the way how the markets are looking like at this point in time. Yes, Birla Group counters ruling from the front.
Absolutely, but let's move on and talk about these individual stocks that are moving in trade today. On the technicals, now we're joined by Osho Krishan, while from the research team, I beg your pardon, we're joined by Snehi as well as Gaurav joining with us. A very good afternoon to all three of you all as well. Let me start then with the first stock that we're going to talk about, and the first stock that is in focus is Mahindra & Mahindra Financial Services. The stock has seen a fall coming in. They were supposed to report their numbers, but they said that now they're postponing reporting their numbers. The main reason for that, they said that there was a fraud that was detected, and this is in one of their northeast branch. Around 150 crores is something that the fraud financial impact that one could see coming in on the company. The fraud took place mainly in the retail vehicle loans and that were dispersed, and involved forgery of KYC documents leading to embezzlement of the company's funds. So yes, because of that, we're seeing some bit of an impact that has come into the stock today, down 4.5% and more than that in trade as of now.
All right, that's M&M Financial for you. Let's talk about a stock that we've not spoken much on this particular show, and that is Tanfac Industries. And why that particular counter is in focus is because it's seen a sharp knock after its earnings. The specialty chemicals manufacturer actually reported a 43.4% year-on-year decline in the quarter gone by, and that is in their profits, while the total revenue saw a decline of about 13.9%. So on back of that, the stock is declining for a second trading session and now holding on with losses above 3%.
Okay, let's move on to the next stock then, and we have Ashok Leyland. Osho, that's the first stock that you're picking for us on the charts and technicals. What is the word for Ashok Leyland? What is it that we should expect from the stock going forward? Currently trading at 173. What's the view?
See, overall, the counter has seen a very decent run from the zone of nearly 155 towards 180. And in the recent period, in the last 2 weeks, it has even corrected from the zone of 180 towards its cluster of exponential moving average. But in last two trading sessions, there has been a strong resurgence that can be seen in Ashok Leyland. So I'm expecting that from here onwards, it has the potential to move again towards the zone of 178 to 180 on a very short-term time frame. So I'm expecting that the traction should be there within next 1 to 2 trading sessions. So one should try to gauge the momentum. And on the lower end, it has a very strong support zone of the cluster of moving averages, followed by 200-day SMA. So that means on the downside, it is very limited. Approximately 169 to 70 should be acting as a very strong support zone, and on the higher end, 180 is the initial target. Once it breaches the zone, then it can even move further towards the zone of 188 to 190.
All right, so that's the word coming in for Ashok Leyland. Snehi, let's talk about Tejas Networks. Fireworks, if we have to see on the screen, one has to look at the charts for Tejas Networks, isn't it?
Well, absolutely, Cheryl. Earnings dhamaka is what we can say when it comes to Tejas Networks, because what a stellar set of numbers this company has gone ahead and reported. For quarter 4, consolidated revenue from operations has more than doubled just on a sequential basis. A very short time frame, but a big jump coming in the revenue at 1,327 crores. PAT also has, now the company has turned profitable. In fact, from a loss just in the last quarter, PAT has come in at 147 crore versus a loss of 145 crores just last quarter. So big improvement coming on that front as well. EBITDA has also become positive. They've gained an EBITDA profit of 307 crores versus an EBITDA loss of 8 crores last quarter. An order book also looks rather good at 8,220 odd crores at the end of quarter 4, while his business is also progressing well when it comes to this company. Stellar set of numbers, big improvements coming in a short time frame, and on the back of that, the stock is locked in upper circuit today, 20% higher as we speak.
Okay, surely keeping an eye out on Tejas Networks locked in upper circuit as of now. But Hatson Agro, Gaurav, how are the numbers looking like for this one? Is this also buzzing in trade?
Well, yes, this stock is also, as you said, is buzzing in trade, and this is on the back of the 4Q numbers. Now, if you look at the 4Q FY24 numbers, the revenue grew almost by 14.4%. Now it stands near 2,000 crore rupees. EBITDA grew by 46.6%, and now it stands near 30 crore levels. And lastly, PAT grew more than 109%, which was actually a significant move in the stock. Apart from that, if we look at FY24 numbers as well, the revenue showed a growth of 10%. EBITDA grew 29%, while PAT grew whopping 61%. Apart from that, if you look at the company's commentary also, company has said that the normalcy has been restored in second half of FY24 in terms of procurement of milk, at the same time in terms of sales. And lastly, the company also is looking to explore options for export of their ice cream and in various countries. So on back of all these news, if you look at the stock performance also, it is up 11%. So definitely keeping an eye on this stock, because we may see some further upside. Let's not forget that this stock has not reached its 52-week high level yet. So we may see some further upside in the stock coming ahead.
Alright, so that is Hatson Agro for you. Let's put the spotlight on a cement major, that is Ambuja Cement. So Osho, on the charts, how does Ambuja Cement look to you right now?
Overall, the cement sector is looking very positive on the technical chart. Specifically, Ambuja Cement is on the verge of giving a fresh 52-week high. So I'm expecting that within 1 to 2 trading sessions, we can witness a very strong movement in this counter. On the higher end, the immediate resistance that can be seen is around the zone of 648 to 650, while on the downside, 600 zone is a very strong support zone for this counter. So I'm expecting the cycle of higher highs, higher lows to be continued, and the time it breaches the zone of near about 635 to 636 on the spot levels, there can be strong traction that can be seen in this counter.
Okay, that's Ambuja Cement for you all, keeping an eye out over there on those levels. But ABFRL, Snehi, that's the one that's buzzing in trade. It's been the talk of the town for some time. What's the word today coming in for ABFRL?
Well, Vinny, ABFRL today is in focus on the back of their Concor highlights that we did see coming in from the management yesterday. They say that the fundraise of 2,500 crores will be used for investment and debt repayment. The exact nature of the fundraising, including the type of security, is not finalized yet. But what we do know is that promoters will have strong participation in this fundraising. Now, the management expects debt to reduce significantly within the next 2 to 3 years. On the back of this particular commentary coming in on the debt front and the debt improvement front, the stock is doing pretty well today, up 9.2%. They say that capital allocation priority will be higher towards the ethnic segment, followed by value retail and luxury, and opportunities under the Madura brand segment don't require much capital for growth as well. Management hopes to close the TCNS merger over the next 4 months, and in the next 3 years they expect the ethnic business to be around 4 to 5,000 crores from the current 2,000 crore. So on the back of this positive commentary coming in, especially on the debt reduction front, stock is doing pretty well for itself today in today's trade session.
Alright, that's ABFRL, but Osho, today is not the only day that the stock has been doing well for itself. It's been actually on a gaining spree off late, given the fact that the renewed interest also coming in, corporate action also coming in, and now positive commentary coming in from the management. But those are all about fundamentals. What are the technicals suggesting? Do you think that spike that we've seen in the last 2 or 3 weeks will sustain for ABFRL going ahead?
See, overall on technical development, we have seen a very strong sustenance above the 200-day SMA on the daily time frame. Even it has started moving above 200-day SMA from the time frame of December last year towards current year. But overall, in the last 2 months, last 2 weeks, there has been very strong traction, approximately 30% of a move in the current month that can be seen in ABFRL. So overall, I am expecting that from here onwards, there can be a very strong reversal that can be seen in this counter. And on the higher end, there can be a very strong target of nearly 300, 310 from short to medium term time frame. So one should definitely try to gauge momentum in this counter for short to medium term time frames.
Okay, looking at the counter for a short to medium term, that's what we're watching out for. But let's move on, talk about Entero Healthcare. Why is that one in focus today? We have a brokerage note that's come in, and this brokerage note where we are seeing that Investec has initiated coverage on Entero Healthcare, target price of 1,590 rupees per share. They're saying that the company has actually emerged as a top consolidator, leaving its peers behind with a series of well-curated acquisitions. Also positives that are there is strong balance sheet that the company has, especially post the IPO. A very strong balance sheet that they're managing to hold on to, management focus. They're focusing also on terms of the operational excellence as well as impressive acquisition track record, like I mentioned before. So yes, they're expecting a growth of around 30% in terms of revenue CAGR growth over the next couple of years. Interesting to watch out for today. Entero Healthcare is buzzing away in trade with gains of more than 4.5% in trade.
All right, let's move on. Let's talk about Inox Wind, and that particular counter is seeing a sharp up move in trade today. At one point in time, the stock was trading higher by about 9% or so. Trading near its 2-month high of around 645.9 rupees per share. Now the stock has given up all of its morning gains. The company has said that the board will be meeting on Thursday, and this in order to consider and approve the proposal of issuance of bonus share issues to stockholders. So on back of that, the stock actually saw a huge up move. On that particular note, the fact that they're going to meet to mull bonus share issue, that is on April 25th. But now the stock is doing absolutely nothing, or rather given up all of its morning gains, trading with gains above 1.5%.
Okay, let's move on to the next stock, and we're going to talk about Concor at stock number 10. And Osho, what's the chart indicating now for Concor? What is the level that one should keep an eye out on? We've seen an uptick of almost 40% in the last 6 months.
Overall, this counter has seen a very strong movement in the last two trading weeks. It has resurged from the zone of approximately 840 towards the zone of 950 now. But overall, on technical charts, the counter is hovering above all its exponential moving average, which is a very positive development on the technical front. And I'm expecting the time it moves beyond the previous swing high, which is approximately the zone of 970, 975. Then from there onwards, there will be a strong movement towards the zone of 1040 and plus targets. 1040 to 1060 should be the immediate target, but I am very much optimistic with the higher targets from medium term time frame. But for short term duration, 1020, 1040 should be seen as the immediate target, while on the downside 920 and 900 is the zone which should act as a very strong support in the near term.
All right, so that is the take coming in on Concor. Let's talk about Vodafone Idea. Snehi, yes, the entire Birla Group counters are in focus in today's trading session, be it Grasim, AB Capital, AB Money also, which we will be talking in a short while, as well as apart from that, you have ABSL, AMC, and now Vodafone Idea. 10% up move on that one. Everybody's been waiting for it, and the reason being?
Well, Cheryl, the reason is that the QIP has been subscribed 6.99 times. FPO has closed with a total subscription of 6.99 times, out of which QIB is 19.3 times, NI at 4.5 times, and retail at 1 time. Now, the board has approved the offer price at 11 rupees per share, but what is helping this stock today is that a note has come from IIFL Alternatives, and they believe that Vodafone Idea has become a very strong candidate for the August 2024 MSCI India review inclusion. The stock has the potential to attract anywhere between $275 to $280 million inflows if prices are supportive going ahead as well. So on the back of this note and the stellar subscription that they've seen for their FPO, the stock is doing pretty well, more than 10% uptick coming in today's trading session.
Absolutely, surely an interesting one to watch out for Vodafone Idea, all the Birla Group stocks that Cheryl has been mentioning. Because look at the run-up that we're seeing. You know, I'm looking at the ticker now and I realize why you're mentioning it again and again. But yes, interesting move that we're seeing there for this Birla Group stocks. Let's move on, talk about Industars then, and that one is in focus. Why? Because we did have CLSA also.
I thought you were going to say thank you to Birla Group company.
Yeah, I was going to say that, but then I was like, okay, might as well now put a pause and give credit to CLSA for writing the note as well. So yes, CLSA, they're upgrading the stock to a buy from a previous outperform rating, hike the target price to 450 from previous target price to 335 rupees per share. And yes, the name comes in, key beneficiary of Vodafone Idea's fundraising and planned addition of 48,000 4G as well as 5G sites. That's interesting. That works out well for Industars. And obviously they go hand in hand because Industars does get a lot of benefit in terms of the business-wise from Vodafone Idea. And that is why they're upgrading the FY25-26 estimate by 1 to 9%, factoring in those 24,000 additional tenancy boostings that will be there. And other than that, past dues settlement also is there for around 5,700 crores, and that could be worth an incremental rupees 21 per share. So yes, that upside is also there, and despite this outperformance in the market, still trading at a discount to the global peers, and that's interesting to watch out for. That's why CLSA positive upgraded the stock to a buy from the previous outperform rating.
All right, so that's Indus Towers moving on back of positive note coming in from CLSA on the back of the Vodafone Idea successful FPO. But Osho, let's talk about Garden Reach. We're shifting base totally. How is Garden Reach looking to you on the charts, given the fact that after the stock saw a huge run up, saw a correction, and now it's back to winning ways?
Yes, looking at the technical setup, it has reached to approximately the zone of 52-week high. With the closer, I am expecting it should close above 940. That should be the highest ever closing on this counter. So I'm expecting, with the recent development based on notable volumes that have been seen in the last 2 trading weeks, I'm expecting that from here onwards the way for this counter is beyond 1000 mark. So this has already started its journey for the 1000 mark. From here onwards, there can be a strong up move that can be seen. On the lower end, approximately 900 and 880 is the level where one can expect a decent consolidation or support zone that can happen in future. But overall, this counter looks very promising to me, and I am expecting 1000 kind of a target in the short term period.
All right, that is Garden Reach for you. But Snehi, Honasa Consumer, this one is buzzing in trade today.
Yes, well, Cheryl, this one is buzzing in trade today, and this is on the back of a brokerage note that's coming in from Jefferies this morning. They have maintained their buy rating for Honasa consumers with a price target of 590 rupees per share. Now, the Dermaco brand has achieved a key milestone of 500 crores in annual revenue run rate, which is commendable. It now leads with a bouquet of products across key brands, and like the management focus and agility along with the growth mindset, this is what Jefferies is liking when it comes to this stock. And they're saying that the management is prioritizing growth over profitability. So this is something that is standing out to Jefferies, and they've come out with a positive note for Honasa consumer as well. Price target of 590 rupees per share. On the back of that, the stock is doing pretty well today, up 8.8%.
All right, so that is Honasa Consumer. Let's talk about HPL Energy and Power, and that is rather Electric and Power. That particular counter is in focus in trade today. When it's on uptick of as much as 7.8% on an intraday basis. The stock was trading higher. Now it's at least about 10% or so.
Upper circuit, I can
upper circuit. I was being a little cautious given the fact that every time I talk about stock prices and they fall off from the day's highest point. So trying to play safe when I talk about HPL Electric. But yes, locked in the upper circuit about 10%. It's an electric equipment maker, and they've launched HPL fans catering to both domestic as well as international markets. So on back of that, the stock is gaining for a second consecutive session. It anyways had a good quarterly gains as well. But yes, new product launch. And an essential one.
Absolutely.
Essential
the need of the hour, the need of the month.
Exactly, or the need of the season rather. And that's HPL Electric for you.
Okay, surely keeping an eye out on that. But let's move on, talk about Macrotech developers. Osho, this one is set to report its numbers tomorrow. The Q4 operational update also looked quite interesting for all these real estate names. We saw a run up. What's the view for Macrotech developers? Realty has been the theme that we've been seeing, and look at the up move, 6 months, 71% uptick. What's the view now?
See, overall, there has been very strong traction in the whole reality space. But looking at the technical perspective of Lodha, I am expecting that it is on the verge of giving a very strong breakout. So from here onwards, there can be a decent up move that can be seen. On the lower front, approximately 1180 to 1200 is the very strong support zone, which is the 21-day exponential moving average. And on the higher end, I am expecting 1280 to 1320 to be seen as the immediate target for short-term perspective. But looking at the results, which is yet to be announced, so I am expecting there can be some kind of volatility associated to it. But technically, this counter looks very sound, and I am expecting a kind of 1300 target in the short-term period.
All right, so that is macro tech developers, but let's stay with the realty space, isn't it? And Gaurav, Oberoi Realty, why is this one in focus?
Well, yes, Oberoi Realty is actually in focus because if you look at the quarter 4 updates from the company, they reported very strong numbers. So, for example, if you look at the pre-sales number, now they stand at 1770 crore rupees, which is actually up 126% on a quarter-on-quarter basis, while 164% on a YOY basis. Even they sold 228 units in Q4 FY24 versus what they sold it as 216 units a quarter before. If you look at the booking value also, FY24 overall booking value stands at 4,010 crore rupees, which is up almost 24% on a YOY basis. And apart from that, company is also looking to launch its project in Pokhran Road, which is in Thane, in second half of the current year, CY25. Now, along with this, if you look at brokerages also, they are being a little bullish. We could say because Nuvama has now maintained its hold rating, but has given a target price of 1,507 rupees, which actually leaves another upside of around 10% from these levels. So talking about the stock price now, this is up almost 3.5% in today's trade. So definitely keeping an eye on Oberoi Realty because we may see some upside coming up in this stock as well.
Okay, let's move on to the next one, and we have PSP Projects that's gaining in trade as well. At one point of time, it was up as much as 4%, and this is on the back of the QIP announcement. They will be launching their QIP, which is around a 244 crore QIP is what we are understanding. So yes, on the back of that, we've seen that the stock has been buzzing. As of now, given up those morning gains, it's holding on to gains only of 2%. The floor price of this minimum price of which the company will be setting, that is something we're watching out for. But yes, we're seeing PSP Projects buzzing in trade on the back of the launch of the QIP. 25th April is the time when we'll be deciding the final prices, the floor price, what is it going to be, the indicative issue price, that is one is watching out for. As of now, what we understand is it could be somewhere around 670 rupees per share, but surely keeping an eye out on that. So that's a bit lower than the current market price.
Absolutely. So PSP Project, something that you should keep it on, on your radar. But on that note, we slip into a break on this edition of Market Fatafat. But as we wind down, as we slip into the break, hear out Harsha Upadhyay of Kotak KMC on where he sees value in the sectors, and also which sectors he thinks will manage to perform well in the quarter gone by.
Clearly, there are a couple of sectors which are likely to exhibit better earnings growth compared to the market average earnings growth even going forward. That's been the case for financial year 24, but we do see a couple of these sectors continuing that trend even into financial year 25, probably into financial year 26 as well. So auto components, cement, these are some of the names that we like. We also like industrials. There has been a very, very strong order inflows that have been seen across the sector. We do believe that at some point of time, the execution will also pick up, and margin should remain quite strong given that the commodity cycle is still benign. We also look at pharma. Pharma should also show reasonably strong earnings growth, better than market average earnings growth. So these are some pockets where we think earnings growth will continue to remain quite strong. And hence, even though the valuations may be a little higher than comfortable levels in some cases, that may continue as long as earnings growth continues in this trajectory. The mid caps are still trading at a valuation which is almost like 20-25% premium to their historical averages. When I talk about historical averages in case of mid caps, I'm talking only from, let's say, 2017 or 18, when the recategorization happened, and there is a clear sense in terms of how money has moved into these segments. So to that extent, even on the basis of those elevated valuations, we are already higher by 20-25%. So there is no room for earnings disappointments here. And if you look at small caps, the case is even more elevated in terms of valuations. It's almost like 45% premium to long-term averages. So that's where we believe that earnings delivery is going to be very, very crucial for small caps and mid caps. If there is any disappointment, then the market may not have the room to really take those disappointments. However, in case of large caps, while valuations are higher, they are not so high. With some shallow correction or some sideways market for the next couple of months, those valuations can get adjusted to historical averages. So that's where our comfort is more on large caps at this point.
If you like this video, then like, share and subscribe to ET Now.